Hi everyone, welcome back to Saheb Academy. Today in this 8th video of depreciation chapter, we are going to solve this practical question number 2 from the ICAI study material. But of our series, this is the 9th problem. And this question is based upon WDV method. So let's just go through the question and let's understand what is being said over here and then we'll solve it, okay? Let's begin. Now see here, the machinery account of a factory showed a balance of 19 lakh on 1st January 2019. So here we come to know that, we might have purchased lots of machines in the previous years and they were getting depreciated year by year. And now on 1st January 2019, in the entire machinery account, we have an opening balance, the written down value as 19 lakhs. Is that clear? So in that 19 lakh, there can be lots of machines. Yeah, simple things, but you have to have proper clarity. Fine. And then they are saying its accounts were made up on 31st December each year. That's the year end. Okay, that's the date when we charge the depreciation normally. And the opening date is 1st January, you all know. And depreciation is written off at 10% per annum. So this is the rate of depreciation under the diminishing balance method, which means basically WDV method. Fine. On 1st June 2019, okay, just after 5 months, isn't it? See, 1st January was the opening date and then they are saying 1st June 2019. So this is just after 5 months. January, February, March, April, May, not June, only 5 months, right? This is 1st June. So what happened on 1st June? A new machinery was acquired at a cost of 2,80,000 and installation charges incurred in erecting the machine works out to be 8,920 rupees on the same date. Okay, so what do you do over here? You all know we have purchased a new machine. The purchase price is 2,80,000. This is the purchase price, but we have to add installation cost with that. We have to capitalize the installation cost also, isn't it? Because 8920, this was incurred to make the machine available to use, isn't it? So whatever expenses you incur before the asset is made available to use, all that is capitalized. It is directly connected. Is that clear? So 2,80,000 plus 8,920, that's equal to 2,88,920. Fine. So this will be the cost of the new machine. Fine. And then after that, what happened? On 1st June 2019, a machine which had cost 4,37,400 on 1st January 2017 was sold for 75,000. Now understand this properly. It becomes a little bit confusing for everyone over here. Okay, lots of people gets confused. What's happening over here? On the same date, on 1st June 2019 only, we have sold one machine. Okay, we have sold one machine for how much? For 75,000. Is that clear? We have got 75,000 by selling that machine. But now they have given us the original cost of that machine, 4,37,400. And when it was purchased on 1st January 2017, that's 2 years back. The current year is 2019 in this question. 1st January 2019 is the opening date of the year. So from this opening date, if you go 2 years back, then that's 1st January 2017. So they have given us the cost on that date. So what we have to do, let's understand, let's plot this on the timeline. Okay, so see the timeline over here. First they told us the opening balance of the entire machinery account is 19 lakhs on 1st January 2019. And then they told us that just after 5 months, on 1st June 2019, we have purchased a machine, a new machine, for how much? 2,80,000, and 8,920 was installation cost. So we added both of them together and the entire cost was, the total cost was 2,88,920. Simple? Yes. And I'm calling that machine as M3. Why M3? Why not M1? Because understand, if you read the whole question, then you will come to know the question is talking about 2 more machines which we had from the previous years. So those machines will become M1 and M2, and the machine which we have purchased now in the current year will become M3. Okay, so M3 2,88,920, that's the cost. Fine. Okay, then what happened? Then they are saying on 1st June 2019 we have sold one machine for 75,000. So let's say M1 has been sold for 75,000, and then they have given us the cost of this machine. We don't know what is the WDV. See, understand, whenever we sell any asset, what do we do from the depreciation point of view? What do we do? How do we do the accounting of that? You all know three things we have to do. The first is we have to charge the depreciation on the asset which you have sold till the date of sale, right? Yeah, sometimes you might have to charge proportionate depreciation if you have sold in between the year, and that would be the, you know, the, what do you say, 99.9% of the time that is what will happen, right? So depreciation till the date of sale you have to charge. The second is you have to calculate the WDV on the date of sale, right? And then you have to calculate profit or loss. How do you calculate profit or loss? You compare the WDV on the date of sale with the sale proceeds, how much money you have got, right? If you compare that, then you get profit or loss, isn't it? So you need WDV on the date of sale. So how do we normally calculate that? In the previous question you saw that, you know, the opening date WDV used to be there. You will just charge proportionate depreciation, you will get the WDV on the date of sale. Compare that with the sale proceeds 75,000 or whatever it is, and you will get the profit or loss. That is what you used to do. But now in this question, what new thing is happening? The new thing is the WDV is given, the cost of the machine which you have sold is given, but not on this date or the opening date. No, on 1st January 2017, 2 years back. Okay, and that is 4,37,400, isn't it? So what you have to do, just apply common sense. You just have to charge the depreciation of this 2 years. You will reach over here, 1st January 2019. Do you understand? Just charge the depreciation of 2017 and then 2018. You will arrive at the WDV on 1st January 2019. Okay, and then from here you have to charge 5 months depreciation till here. You will get WDV on the date of sale. Okay, WDV on the date of sale. Compare that with the 75,000, the sale proceeds. You will know how much is profit or loss. Okay, is that clear? That is what you have to do. Simple and straightforward. It looks a little bit confusing, but it's really simple. Fine. So that's all regarding the M1. Fine. And then what else? What else is happening? See, another machine which had cost 4,37,000 on 1st January 2018 was scrapped on the same date. On the same date, we have scrapped M2, another machine. Let's just call that as M2. Scrapped means we have just given away in the junkyard. Okay, and it realized nothing. That's why I'm saying given away, because you know, we were not able to sell it. Maybe it was so much damaged or something. Okay, so it realized nothing. We didn't get any money. So now what is the procedure over here? See what has happened. On this date you have scrapped it. Okay, you have disposed it off. You have not received any money, but still you have to do the accounting of that. You have to calculate what's the profit or loss is happening because of that. Of course it will be loss. Okay, you have not got any single penny. Okay, no rupees at all. So now the cost of that is given on 1st January 2018, 4,37,000. So that's just 1 year back. Okay, 4,37,000 cost of M2. So apply the same common sense which you applied before. What you will do, you will just charge 1 year depreciation. You will reach over here, 1st January 2019. You will get the WDV of M2 on 1st January 2019, and from here just charge 5 months depreciation. Yeah, just 5 months depreciation. You will get the WDV on the date of sale, or you can say on the date it got scrapped. Okay, right. So once you get that, just compare that with the sale proceeds. But here the sale proceeds are what? 0. So entire WDV on the date of sale of M2 is loss. Is that clear? That is what you have to do in the working notes. It's really simple and straightforward. You understood what you have to do, right? Regarding M1 and M2. Okay, don't get confused. It was really simple. Then what is happening? Nothing else. See, draw up a plant and machinery account for the year 2019, allowing the same rate of depreciation. That means 10% only, as in the past, calculating depreciation to the nearest multiple of a rupee. Now this sentence gives you the idea that somewhere you might have to round off. Okay, if it is 0.6 or 0.7, you will make it the whole amount, the next amount. Yeah, we'll just round it off. Fine, we'll see that, don't worry. And then what will happen? Come to this date, the year ending of 2019, 31st December 2019. So at the year end, what do? You charge depreciation normally, right? So you have to charge the depreciation on the machines, on the asset which you still have at the year end. So at the year end, what you have? Do you have M1, M2? No, these are sold, right? M1 and M2 is not there. They are disposed of. What do you have then? You have M3, isn't it? and you also have this 19 lakh other machinery, not this entire 19 lakh, whatever other is there, other machineries are there, that you will still have on 31st December 2019. Understand properly. See, in this 19 lakh there was M1 and M2, isn't it? But you have just sold M1 and M2 now. The remaining whatever machinery was there in that 19 lakh, that is still there till the year end. That was still being used or available to use for the entire 12 months. So you have to charge the depreciation on the remaining or other machinery for entire 12 months. Okay, you have to charge the depreciation on that at the year end. Is that clear? Yes. And then M3 also. Now M3 also, you still have on the year end. So you have to charge the depreciation M3 for how many months? You purchased it on 1st June. So whenever you purchase in between the year, what is the shortcut? The time period shortcut? From date of purchase till the year end. 1st June 2019 till 31st December. June, July, August, September, October, November, December. So that's 7 months. So 7 months depreciation you will have to charge on M3. And on the remaining machinery, the entire 12 months depreciation. Because it was there with you now for the entire year. Is that clear? Only M1 and M2 you have sold. Only M1 and M2 you have sold out of this 19 lakhs. Okay. Now, one important thing is understand properly. How will you come to know how much is, what is the WDV of that remaining machinery in this 19 lakh? This entire 19 lakh you cannot depreciate, because in this 19 lakh there was M1 and M2 and you have, killed it off. You have sold it off, right? So how will you calculate that other balance, that other machinery? It's really simple. Understand. You already have the WDV of M1 and M2 on this date, isn't it? You depreciated M1 na 1 year, 2 year. So here you will have the WDV of M1 on 1st January 2019, and here you will also have the WDV of M2 on this date, right? So just deduct them. Whatever the WDV of M1 and M2 are there on 1st January 2019, just deduct that from the 19 lakh. Just subtract that from the 19 lakh. You will get the WDV of the remaining machinery in this 19 lakh. And then on that WDV, charge the 10% depreciation for this entire 12 months. Okay, and that you will be charging at the year end. Don't worry, we'll see this in the working note. It's really simple and straightforward. Okay, you have got the complete idea right now, the entire logic, how you have to break down the question, plot this in the timeline, properly understand and how it will be happening. It's really simple and straightforward. Don't worry. Let's just go to the working notes, okay, and let's understand. Now see, here we have the working notes. Let's prepare the first working note, that is regarding the M1. Which machine is that? M1. M1 means the machine which we have sold on 1st June 2019 for 75,000, and we had been given the original cost of that on 1st January 2017. That was 4,37,400. This was the cost, right? So what we had to do, I already explained you, we have to charge the depreciation of 1 year, 2 year, and then 5 months, right? That is what first we need to do. We have to calculate the WDV on the date of sale and then compare that with the sale proceed. You will get profit or loss, right? What is the rate of depreciation? 10%. Let's do that. See, it's really simple. First you will take the cost on 1st January 2017, 4,37,400, charge the depreciation of 2017. So less depreciation at 10% on this 4,37,400. That is, just cut 1 0, 43,740. Simple and straightforward. And then deduct that, you will get the WDV at the end of 2017, or you can say WDV at the beginning of 2018. It's the same thing. WDV on this date, 1st January 2018. Fine. That is 3,93,660. Now again charge the depreciation of 2018, 10%. So that's, just cut 1 0, 39,366. Okay. Deduct that. After deducting that, after subtracting that, you will get the written down value on 31st December 2018. That's 3,54,294. Okay. Now this, you can also say this is the WDV on which date? On the opening day of the current year, isn't it? 31st December 2018 is just, a day before this, 1st January 2019. So it's almost same only. Is that clear? Right. After that, what you have to do, you all know you have to charge the depreciation of 5 months in the current year from 1st January 2019 to 1st June 2019. So how will you do that? It's really simple. Just see what is the WDV. The WDV is 3,54,294. 3,54,294 into 0.10. that's equal to something. Now you have to proportionate this, only 5 months now, 5 by 12, so that's equal to 14,762.25. so you have to round it off. The question has told now to the nearest multiple of a rupee, so it's less than 0.5, so you will round it back, that is 14,762. okay, so you will ignore that 0.25, so that's equal to 14,762. that's the depreciation for 5 months in the current year. Just deduct that, yeah, this minus 3,54,294. okay, subtract that, you will get 3,39,531. so that will be rounded off 3,39,532. is that clear? Simple. Okay, now what is this? This is the WDV on the date of sale. Let me just write that. Okay, what is this? This is the let me write over here, this is WDV on date of sale. okay, WDV on date of sale. So what do you do next? You have reached till the date of sale, you have calculated what is the WDV of M1 on the date of sale. You have to compare that with the 75,000, the sale proceeds. How do you do that? You all know, we just subtract the sale proceeds. okay, 75,000. so if you subtract that, then we find out that 2,64,532 is the difference, and that difference is loss. You can easily understand now. 3,39,532 is the book value on the date of sale, and then you have just got 75,000, just little bit, right? So of course you have made a loss, and the loss is 2,64,532. Shall we calculate? okay, 339,532 minus 75,000. okay, so that's equal to 2,64,532. this is the loss on M1. is that clear? So M1 working note is over. Let's go to the M2. Really simple. Here they have written something, calculation of loss on scrap machine. You just have to write calculation of depreciation and profit or loss on M2. okay, that's all. Just use simple words. okay, it's really simple. Fine. So cost, let's start. So what happened with the M2? Let's just go back to the timeline. For the M2, we have this scrap, we have got nothing on the same date only. Now, so what we have to do, we have to see where is the cost. The cost is over here, 4,37,000. Charge the depreciation for this year, right, for 2018, and then charge the depreciation for 5 months. You will reach over here, you will get what is the WDV on the date of sale. Compare that with 0, whatever the difference, of course the entire thing, so that entire thing will be loss. okay, that's all you have to do. Let's start. The same rate of depreciation only, 10% only. okay, so cost is 4,37,000. we saw on the timeline. 10% is the depreciation rate, so less depreciation at 10% on 4,37,000. just cut 1 0, 43,700. okay, subtract that, you will get 3,93,300. this is the WDV on 1st January 2019. okay, 1st January 2019. what is that? Which date is that? 1st January 2019. okay, the opening date of the current year. And it's very important, whatever WDV you will have over here, that you have to later subtract with this 19 lakh of M1 and M2 also. You have to subtract those with the 19 lakh to get the remaining WDV of the machinery. okay, remaining machinery is WDV. is that clear? right. So 3,93,300. then what you have to do, you have reached over here now. So from here you have to charge the 5 months depreciation on the M2. okay, 5 months depreciation. So let's calculate that. 3,93,300 is the WDV. 3,93,300 into 0.10, that's something, into 5 by 12, that's equal to 16,387.5. so we have to round it off. okay, 16,388. okay, see here, 16,388. it was 0.5 now, so we have to round it off. okay, so depreciation at 10% on this amount for 5 months, it was this much. Subtract that. okay, subtract this. Let me just write that again. 16,388 minus 3,93,300, that's equal to 3,76,912. okay, what is this? This is the WDV on the date of sale. Sorry, what happened? Yeah, actually that is the WDV on the date of sale only. This is WDV on the date of sale, but since here there is no sale proceeds to compare to, yeah, there is no sale proceed, it's 0 now, so that entire thing is also the loss. okay, so you can say this is loss as well as this is the WDV on the date of sale. okay, on the date of sale. is that clear? Did you understand? There was nothing recovered, nah, you didn't get anything. Yeah, no sale proceed, entire zero. So whatever WDV on the date of sale was there, 3,76,912 minus sale proceed 0 is the same answer now, is the same figure, so that's loss. Is that clear? Easy and straightforward. Okay, now let's move on. Next, what you have to do now, understand one thing I told you. What you have to do is you have to calculate what is the remaining machinery in this 19 lakh. Yeah, we know that M1 and M2 is existing in this 19 lakh. So what is the remaining? So understand, to calculate that you need everything on the same level. Okay, so M1 and M2 written down value should be of the 1st January 2019 only, right? So it's really simple to calculate. We already know that. See, let me just mark that over here. Where is that? Yeah, here. See, this is there now. This is on which date? On 1st January 2019, the M1 WDV, okay, and then M2 WDV on that date is over here. See, 1st January 2019, this is M2 WDV, okay. How much is that? Let's just add it up. Okay, let's just add it up. 3,54,294 plus 3,93,300. Okay, so if we add that up, that's equal to 7,47,594. So what is the 7,47,594? This is the WDV of M1 and M2 on this date. WDV of M1 and M2 on this date, on 4th January 2019. So if we subtract that from the 19 lakh, minus 19 lakh, what will happen? We will get the WDV of the remaining machinery in that 19 lakh. Apart from M1 and M2, the remaining machinery are there now. What is the WDV of that? The WDV is this. It is 11,52,406 rupees. Is that clear? So on this we have to charge the depreciation. On this we have to charge the depreciation for the entire 12 months. Shall we do that in the calculator? Okay, let's do that. But let me just show you the calculation over here first. See, balance of machinery account on 1st January 2019, that was 19 lakh. We know that. And then what did they do? They did the same thing. They took the WDV of the machinery which we have sold. Yeah, this is the, let me just mark that. Okay, because people will be confused. So this is M1, okay, and this is M2, right? So they have taken WDV of M1 and WDV of M2 on the same date, on 1st January 2019 only. Yeah, they added it up. That was equal to 7,47,594. We just saw, and they subtracted that. They got 11,52,406. Okay, 11,52,406. Yeah, 406. That's the WDV of other machinery, remaining machinery in that 19 lakh. Now on this we have to charge the depreciation for the entire 12 months. Okay, so let me just write here. See, charge depreciation for 12 months. Okay, so on this we have to charge depreciation. So that will be this. Okay, that will be this. See, 11,52,406 now. Let's calculate. 11,52,406 into 0.10, that's equal to 1,15,240.6. 1,15,240.6. So actually you could have, rounded it off, but they haven't. Okay, why they haven't? Actually you need to. So 1,15,241 you have to take. Okay, but it's fine. Okay, it's fine. So 1,15,240 they have taken. That's also fine, right? So 1,15,240, that is the depreciation on the remaining machinery. And then what you have to do, you have to calculate the depreciation on the M3 also, isn't it? You had the M3 also now. For the remaining machinery you charge the depreciation for the entire year. Now for the M3 you have to charge the depreciation for only 7 months, from 1st June till 31st December. So that's 7 months. So it's easy, you can easily calculate that. Just see what is the cost. 2,88,000. How much was that? 2,88,920 into 0.10 into 7 by 12. That's equal to 16,853.6667 is there. So you can just round it off. 16,854 you can take. Okay, 16,854. Is that clear? Right. So now what will happen? See what they have taken over there, 1,32,094. This is the sum of these two depreciation. This is the sum of these two depreciation. This is just current year depreciation. Current year depreciation on what? Not on all machines, on existing machines, on existing asset, not the asset which you have sold or scrapped, just the existing. Is that clear? That is what they have done. So 1,32,094 will be the depreciation of the current year on existing machines, on asset which you have not sold. Is that clear? Simple and straightforward. Now let's just see the ledger account. You have already done all the calculations, so it's really simple and straightforward. Now let's just see the ledger account, the machinery account. Now see, here we have the ledger account of plant and machinery. So you all know the opening balance will be on the debit side, closing balance on the credit side, right? So opening balance in the question we had on 1st January 2019 was how much? It was 19 lakh. See, now in the question the requirement is that you just have to prepare the machinery account only for the year 2019. Okay, so opening balance in 2019 was 19 lakhs, right? So January 1st, to balance brought down 19 lakhs. Clear? Simple. And then what happened? And then we came to 1st June 2019. We purchased a machine for 2,88,920. Actually, we purchased for 2,80,000, but let's just consider everything together. Okay, so we can say plant and machinery is getting debited because of the money which we paid to acquire another machinery. Okay, plant and machinery account debit to bank account, that is 2,88,920. And then what happened? And then see, on the same date we have sold a machine for 75,000 and we call that as M1, right? So how will you record that in the ledger account? You all know three things we have to do. The first is, charge the proportionate depreciation. The second thing is WDV on the date of sale, and then calculate the profit or loss. Yes, that we have done. Now here what we have to do, here we have to record the sale for how much you have sold. So that sale entry will be there, sale posting, and then you have to charge the depreciation on that asset which you have sold, and then you have to take the profit or loss which you have made. Now here you are not maintaining asset disposal account or provision account and all. So everything regarding the sale, all the transaction regarding the sale will happen in the machinery account only, isn't it? That is what we do now. This is the case 1 disposal. Case 1 disposal. There is no provision, there is no asset disposal account. Simple, disposal treatment. Do everything in the plant and machinery account. Fine. So on the credit side, first let's just record the sale. You all know on June 1st we have sold. By bank, plant and machinery is decreasing because we have sold. We have got money in the bank. Bank account is increasing, right? Machinery is decreasing because of the money which we have received in bank. That's the sale. So that was 75,000, right? And what was the depreciation in the current year on this? What was the depreciation in the current year on this? Let's see in the working note. In the working note, if we see, then we come to know that on M1, right? On the M1, we have charge depreciation in the current year of how much? 14,762. Only this you will take. You will not be taking all this because this happened in 2017, this in 2018, and the ledger account is only of 2019. Understand properly. You will only take 14,762. Only that 5 months depreciation. See, by depreciation 14,762. Plant machinery is decreasing because of depreciation. Clear? Easy. On sold machine. And then there was a loss now. How much loss did we incur on M1? On M1 we incurred a loss of 2,64,532. So where do we record losses? We record losses on the credit side of plant and machinery, isn't it? Yes. Later it will go and reflect on the debit side of profit and loss. Okay, so to facilitate the cross posting, we do it like this, right? So by loss on sale, 2,64,532. You can also write by loss on disposal, or you can just simply directly write by profit and loss. Is that clear? It's up to you. 2,64,532. If your working notes are right now, this will be very simple. So just properly do the working notes. Okay. After this, what happened? After this, we have sold M2. Have we sold really M2? No. We didn't sell M2, we just scrapped it. We just gave it away, in the junkyard, for example. So what happened then? What was the, the money we received? We didn't receive any money. So this posting will not happen. By bank regarding M2 will not happen. Okay. Okay, then fine. So then Depreciation will charge now? Yes, of course, depreciation will charge now, right? So depreciation for 5 months, that's 16,388. So see, by depreciation, okay, by depreciation on the scrap machinery, okay, just depreciation is enough, that is 16,388. It's better to write in the brackets, okay, it's good presentation. Fine. So you will write by depreciation 16,388, and then you have made a loss now. So what was the loss? The loss was how much? The entire WDV on the date of sale, that was 3,76,912. So that's the loss, by loss on scraping the machine. Fine, 3,76,912. Clear? Simple, this thing. All right, easy. After that, what happened? After that, everything was finished. In the timeline, we reached to the year end. Yeah, everything was finished now, all the 3 events, and then we reached at the year end. On the year end, we had to charge the depreciation on M3 as well as the remaining machinery out of this 19 lakh, and we have already calculated the depreciation and everything. How much is that? See here, 1,15,240 on the remaining machinery, and on the M3 it is 16,854. Adding those two up, we will get the total amount as 1,32,094 rupees. That is the current year depreciation on the machinery you still have. By depreciation, 1,32,094 rupees. 1,32,094 rupees. Easy and straightforward. Okay. After that, what you have to do, you have to balance the machinery account. Really simple and straightforward. This side will be bigger. 19 lakh plus 2,88,920, that's equal to 21,88,920. Let's just take that in calculator. 21,88,920. Okay, can you see that? Yeah. Minus 75,000 minus 14,762 minus 2,64,532. Sorry, 532 minus 3,76,912 minus 16,388 minus 1,32,094 rupees. That's equal to 13,09,232 rupees. That is the closing balance of plant and machinery account, or you can also say the WDV of the machinery. Machinery, which machinery? Machinery 3 and the remaining machinery. Okay, so that's how you do it. It's really simple and straightforward. The main thing was you have to properly understand how to break the question and plot it properly on the timeline. Once you do this properly, once you understand how it works, right, and if you practice lots and lots of sums, lots of problems, then what will happen is you will understand the language properly, the technical language which is used over here, right? Then everything is really simple. The calculation you already know now. This is WDV method. You always calculate on the written down value, on the closing balances. That's what you do. Whenever you sell in between, you have to charge proportionate depreciation. And then what do you do? Whenever you sell something, what you have to do? You have to calculate proportionate depreciation, right, till the date of sale, and then calculate WDV on the date of sale, and then calculate profit or loss. How do you calculate profit or loss? Just compare the WDV on the date of sale with the sale proceeds. You will get the profit or loss. That's what you do. Really simple and straightforward, right? Yeah, so this was like an exam wise question. Okay, this is completely exam wise question. So this is a very important question actually. So that's it for this video. Okay, see you in the next video. Bye.